Shaul is saying you will do adjustments to credit spreads or simply close the trades if it reverses. No, no, no. There is a whole process of adjustments, all right? Credit spreads. So I have shared it in my previous co-trading workshop when I was trading also. And I have shared it in the course also, the whole adjustment process. So you can go through that. It's an elaborate process. There are certain rules. And once those conditions are met, we do adjust. So I'll just quickly give you an example. So let's say you're trading Nifty, and this was the important HVN that I talked about. Let's say you accept above that, and then you accept above this double distribution trend day. Now this is kind of a trigger to go and establish a credit spread. But let me check what that day was. September 4th. What was September 4th? That was Monday. So you are allowed to take a trade. So now you have established a bullish credit spread here, okay, in this zone. What are your adjustment points? First and foremost, this HVN or this low, Monday low, then this HVN, these single prints, all are important references. Okay. Now, when you are establishing your credit spread, let's say you establish a bullish credit spread here, you have to go certain distance away. So let's say you went to 19,300. Why will you select 19,300? Because there are multiple references in between. This HVN, single prints, this HVN, this low. So there are multiple references in between your short put and the current market price at that point in time. Okay. Now, when the market goes against you, you look at all these references. Okay, this HVN is gone. Now you're on your guard. It starts accepting in the single prints. Maybe, that is the level where you decide to adjust your trades. So if it is doing that, the first thing to do is to roll your short puts down. So you have sold 19,300 and let's say you have bought 19,100. You roll it down to, you sell say 19,200 or 100, and correspondingly you buy. Your long option also gets rolled down. That is one way of adjusting. Okay. Now market comes lower but gets supported at this HVN and again starts going back up. Fine, you don't have to do anything. But now what is happening is market also broke this HVN, and even 19,200 is looking a little bit risky. So now what you do is, your last point of demand also is broken now. So not only do you roll this 19,200 further down, you establish a bearish credit spread now, so that you roll it down, some of your losses will be recovered. For rest of the losses, you use bearish credit spread. Make sense? And always understand, you go ahead and you establish a trade. If this trade is proven wrong, okay, that means it has come into your adjustment zone. Now what you will do, your objective now is not to make money, but to achieve break even, to reduce the losses. All right. So let's say this everything went against you, and now suddenly you are having a loss of 2,000. Okay. Now your job is not to convert this 2,000 loss into a 4,000 profit. No, you have to reduce this loss as much as possible. Make it zero, make it 500, make it 1,000, whatever your situation allows. Your job now is to reduce these losses. So if you are proven wrong, your objective is to get out of the trade at the least loss possible, not to make money. Okay. That is how you manage your trades.